Hi everyone, welcome to the Big Whales Big Talk, where we host every week entrepreneurs, builders, and investors from the crypto ecosystem. I'm Raphael Bloch, the co-founder and editor-in-chief of The Big Whale, and today I'm very pleased to welcome to CATHIE Wood from Ark Invest. Hi, CATHIE.
Hello, very happy to be
Hello.
here. Thank you for inviting me.
Yeah, thank you very much. So, CATHIE, you are one of the biggest personalities of the crypto ecosystem, not only because you are running Ark Invest, but also because you bet a lot on crypto and especially on Bitcoin. Few weeks ago, you explained that Bitcoin will worth more than $1 million. But before starting, and because also I have a lot of questions for you, my first one is quite simple. How are you?
Oh, I'm fine. Thank you. It's been a great ride, since 2015 when we took our first exposure to Bitcoin. So we're doing great. It's been obviously very volatile along the way, but even the volatility has been good because every time there's a controversy, we have another opportunity to learn more about Bitcoin and other crypto assets.
Okay, cool. And so, uh, just a few days ago, Bitcoin reached a new all-time high, so above $69,000. What do you think about it, and how do you explain this?
I think there are a couple of things going on there. First, there were 11 spot Bitcoin ETFs approved at the same time in the US on January 11th. And we had a bit of a sell on the news, but as more and more people, investors, advisors, asset allocators understand that this really is a new asset class and
Mm.
there's scarcity value now associated with it. And they believe that, I think we're seeing a movement in. Now, what's interesting about that is not one of the major platforms like Morgan Stanley or UBS has
Mm.
approved these in the US. So they're not the buyers right now. It's more the independent advisors and retail investors who are moving the needle. The other thing that's going on, and this may not be so obvious in Europe right now,
Mm.
is we're having another phase of what is the regional bank crisis here in the US. A few banks
Yep.
are having to raise money, and it
Yeah,
seems.
especially in New York, right?
Yes, the New York Community Bank. Oh, so you know very well, very good.
Yeah.
And it seems that this happened the same time last year. It seems like March. This time in March
Yeah.
is always an interesting time.
Yeah.
Yes, and so last year, I think many people in our industry were astonished to see regional banks implode. A lot of
Mm.
the stocks were down 50, 60%. And Bitcoin, same time, was up more than 40%. And so there's nothing like price signals to get investors' attention. So this was the first time they were able to see that not only is Bitcoin a risk on asset, but it could also be a risk off asset.
Yeah.
No counterparty risk, flight to safety.
Okay, interesting. And so, uh, what do you think is, I mean, the next target, especially for Bitcoin? So we reached a new all-time high, but we saw also that it's not, I mean, a strong support. So what's your next target? You explained many times that it could be 500,000 or even 1 million. So what's your next move?
Yes. Well, we have been taking profits in, as you can see from our trading every day, in a name like Coinbase because we think there could be a little bit of a settling out in Bitcoin to the benefit of other crypto assets. And of course, Coinbase is exposed to all of them, but seems to be more moved by the movements in Bitcoin. So we think while these platforms, the ones I mentioned, evaluate the various ETFs. and do all of their due diligence, we could see a little bit of marking of time here. Depends. If we have another regional bank crisis, I think Bitcoin could continue to go up. But if not, then I think the next big move up is when the platforms start moving in. And that's more on
Which one? When you talk about platform, it's
yes, the major. I'm sorry, I'm
okay.
not. I'm talking about the. We call them wirehouses here. You call them
Okay.
intermediaries there. I
Okay.
think.
Okay. I see.
Yes, so the Morgan Stanleys and the
Yeah.
UBS
Okay. Okay.
and so forth. They will need, some need 3 months, some need a full year to watch execution, which ETFs will win. They don't want to commit to an ETF that is going to discontinue Bitcoin if it doesn't have enough in the way of assets.
Okay, interesting. And I mean, I would like to go deeper about the ETFs, but you didn't mention the halving.
Yes.
Why?
Yes, it is interesting as we are going out and educating advisors and different intermediaries about Bitcoin. We're talking about the halving, and our experience with halving in the past is that it is it's a positive for Bitcoin, with time. So I think April, which is 3 months after launch, could be a time for one of the intermediaries or platforms, as I call them, to commit, because they will want to be there. The halving, our experiences and the facts are that it doesn't increase Bitcoin's price right away, but with time it does, especially because this time, with the halving, the rate of supply growth of Bitcoin will drop from roughly 1.9% to 0.9%. And that will be the first time that the supply growth in Bitcoin will drop below the very long-term supply growth of gold.
Interesting.
And many people are beginning to understand the difference between Bitcoin and gold. When the gold price shoots up, then supply growth actually is faster. That cannot happen with Bitcoin. And so they're understanding the difference. And I think the light bulb is going on for some investors.
Okay, okay. And I mean, you mentioned different platforms, so intermediaries. Are you directly in talks with them, for example, with Morgan Stanley or others?
Yes, we're in talks with all of them, and we have been for some time. What I like about the discussions is they are going deeply into our infrastructure, our operations, and they're doing their homework. They're very serious about this, and so that's good news.
Okay, and all of them?
Yes, all of them are. They're at different stages. One of the surprises to us is one of the most conservative intermediaries out there might be the furthest along. I haven't named it in the ones that I've told you, but it is very far along, and it surprises me.
Okay. Interesting. So yeah, we will follow it closely. And so talking about the ETFs, honestly, and back to 2023, especially at the big whale, we didn't think that it would have been such a huge start like we saw. What do you think about it? And especially, do you think that BlackRock killed the game?
I'm sorry, BlackRock.
Yeah, BlackRock, yeah, with their ETFs. Do you think that they killed the game with their ETFs?
Oh, I'm sorry.
Yeah. Sorry. Yeah, it's the French pronunciation.
No, it's a beautiful pronunciation, but I thought you said Black Hawk, which I think is a hacking.
No, it's yeah.
No. So, well, we are very gratified at what has happened here. to get BlackRock involved after, when we gained our first exposure in Bitcoin, gave our clients their first exposure in 2015 when it was $250. And back then, BlackRock, all of the major asset manager platforms and providers, they thought this was a joke. They thought we had just started Ark in 2014. And so when we put Bitcoin in our portfolios in 2015, they actually made fun of us, saying, oh, okay, this is a marketing gimmick. They're just trying to get attention. And so that's what life was like for the first, I'm going to say, 6 years. And then 2-3 years ago, they began to understand, wait a minute, this could be a new asset class. And when BlackRock struck its deal with Coinbase, even while the US regulators were saying, no, 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 this is just for criminal activity. Once we saw BlackRock strike the deal with Coinbase, we knew that this was the time. So 2 to 3 years ago, more and more asset managers started thinking seriously about this new asset class because they had to. It wasn't acting like any other asset class. And anyone with a fiduciary responsibility has to look at a new asset class with very low correlations to other assets for their clients. And so they had to study it. Another thing happened in 2018. Cambridge Associates, which is a major consultant to endowments and foundations, it was the first consultant to come out and say, you know what, you all may not like this newfangled thing, but it is behaving differently from other asset classes. So you at least should take a point of view and understand why you don't like it. So I think that's when some institutions started studying it seriously.
Okay. Very interesting. And so you have also your own ETF with 21 shares. What do you think about the launch? Why did you partner with them? Because it's an European-based company, even if they have also an American branch. So what do you think about it and why?
Yeah, we have been very happy with the launch. We are number 3, BlackRock, Fidelity, then Ark 21 shares.
Okay.
And
With how many assets under management in your?
We are, I think we've just hit $2.4 billion.
Okay.
So quite, in roughly 6 weeks, it's quite a successful launch, almost 2 months now. 21 shares. I've known them for a while. I met one of the founders, Ophelia Snyder, at an ETF confab in 2019. And for full disclosure, I've been on their board for several years.
Okay.
And so one of the reasons I wanted to get to know them better is I saw that they had 40 different funds, and they had been through many markets in their 5 years, booms, busts, halvings, forks. And so they had gotten through that. Their infrastructure and operations had been battle tested. We didn't have that infrastructure. It's not what we do. And so we thought it would be a great partnership, and it has been a great partnership. I think many people in the US are surprised that we are number 3 because there are other much bigger asset managers like Invesco and Franklin and Wisdom. They're much bigger.
Yeah.
And so many people assumed that there would be 3 big winners, and we're one of them. They're quite surprised about it. Yeah.
Okay, interesting. And just how do you explain this success?
I think ARK stands for disruptive innovation, Ark Invest. So we have put out research on Bitcoin since our founding. Our first paper was It was a blog in 2014. And then we put out a white paper in 2015 called Bitcoin. Could Bitcoin serve the three roles of money? So means of exchange, store of value, unit of account. We did that in collaboration with a very well-known economist, Art Laffer. You may know him, Laffer.
Yeah, Laffer. Yeah, of course.
Supply-side economics.
Yeah.
He collaborated with us on that paper. And the reason he did was after he read the paper, he said, wait a minute, this is what I have been waiting for since the US closed the gold window in 1971. So 50 years. I've been waiting for this for 50 years. This is a rules-based monetary system, and it's a global monetary system. And it's decentralized with no government oversight, no human decision makers. I love this. And so, to have a famous economist, and here for full disclosure, he was my professor at the University of Southern California in the day. He's been extremely influential in my career. And he is a friend, but he has never put his name on a paper like this. And many people approached him about digital cash in the 1990s. He never put his name. This is the real deal. So, and then in 2016, we put out another white paper in collaboration with Coinbase. Coinbase was only at its Series B funding at that time. And the name of that paper was Bitcoin ringing the bell for a new asset class. So I think many investors know, what we're talking about, number one. Number two, we partnered with an infrastructure and ops provider that has been tested. And number three, and this is also extremely important, we have been training our distributor since 2016 on Bitcoin. And so we have wholesalers and salespeople who really understand Bitcoin. Yes.
Yeah. I think that this is the biggest point and the biggest trend, especially for Ark Invest and 21 Shares, to have this network for the distribution of the product. And so when you see Europe, because the big whale is based in Europe, in Paris, to be precise. So in less than 2 months, we saw more inflows in ETFs, Bitcoin spots in the US than in Europe with the ETP during at least 10 years. How do you explain this gap?
Yes, there was a lot of drama in the United States, mostly with regulators. So this has been a 10-year fight with regulators. And the fight has brought other government entities into the discussion, including the judicial branch. And so the SEC has lost one case after another in the court of law. Basically, the judicial branch of our government was saying, wait a minute, SEC, you have overstepped your bounds. You should not be making a judgment call on whether Bitcoin is a good investment or is risky. You just have to make a judgment call about whether it can be put inside an ETF wrapper. Essentially is what they've said. And the other thing is the SEC looks at everything as a security. That's what it does. And Bitcoin is not a security. So not under your jurisdiction exclusive. So I think the drama around that in the United States and the publicity and investors learning more about Bitcoin because of it and trying to develop their own point of view. And then, of course, we put our research out there, and we're essentially telling institutions, asset allocators, you better have a point of view on this, because if it is a new asset class, you cannot miss it.
Yeah, no, sure, 100%. And so I fully understand.
One other thing, just
go ahead.
add to the drama. It's been really fun, actually, to have 11 competitors going at it at the same time. We were first in line to get approval, and the SEC just approved all 11 on the day of our deadline, which we understand why, because they didn't want to play favorites for this. So to have 11 companies going at it, all of the publicity around that, the fees coming down, the fees were much lower than in Europe, of course.
Okay, interesting. Okay, yeah, I see. And don't you think that maybe it's just a little bit unfair for you because you worked so hard on those topics during so many years? Yeah, don't you think that this is a little bit unfair, especially for Ark Invest? Because yeah, everyone has, the same right now.
Yes, I won't say that it's unfair. The most important thing to us is that we have buy-in now broadly, because we were fighting the fight all alone. Nobody else was supporting Bitcoin back in 2015 or 16, or even in 2021. They were still, so it's much better to have buy-in and have more and more firms helping their investors understand how important this new asset class is. Now, if you want to talk about fairness, we consider Bitcoin to be the financial superhighway, a public good. So we understand why everyone, all 11, going at it at once. We're David, we were fighting Goliaths, and we're very happy with how, and I have to give our marketing team just tremendous credit for being with us every step of the way. Now, and of course, our research.
And just to to take your point and maybe just to add another question about fights. As you know, so it's done for the ETF Bitcoin spot.
Yes.
But as you know, there will be a fight about the ETF Ethereum spot.
Yes.
So I would like to know what you think about it, especially in the fact that you are working on your own file. So how things going?
Yes, so that's also very interesting. I was just about to make that comment and contrast the Ethereum ETF from the Bitcoin ETF. Bitcoin ETF, super highway in the financial system, just the internet financial system, public good, low fees. We want to provide as much access as possible, invite as many people into this ecosystem as possible. Ether or Ethereum, I still don't understand why we're calling it the Ethereum ETF when it's really the Ether ETF. But anyway, that's what's happening. And this is different. And we are first in line again, along with one other provider, which is not BlackRock or Fidelity. It's VanEck. And that's in May. I think it's May 23rd. It's
23. Yeah.
Okay.
Yeah.
So we are first, and BlackRock and Fidelity aren't, their approvals aren't due until August. We are hoping this is not another everyone at once, because then we will say, we understand Bitcoin, we understand that one, but we should go back. The SEC should go back to the rules of the game, which is first come, first serve. And we're there first. So, it may be that they won't, and we'll just have to live with it. BlackRock and Fidelity have, sales forces that, swamp what we offer.
Yeah.
And so that's all it comes down to. But we hope that the SEC will go back to business as usual. Yes. So that's what I'll say.
I fully understand. But Cathy, don't you think that the proof of stake mechanism will change a little bit their approach? And honestly, I can understand that. Their choice will be different because proof of stake is not proof of work. So yeah, what do you think about it?
Yes, a couple of things. We think that these ETFs will not, that the SEC will not allow staking. And what this highlights, once again, and we're going to have to bring the legislative branch. So we have three forms of government in the US, checks and balances. There's the executive branch, and the SEC is really that. There's the judicial branch, and then there's the legislative branch. We need a new framework. And the SEC not allowing staking is proof of that. And we are talking to legislators about this. And I know that our team, working alongside 21, believe that that even if we don't get staking now, that there will be amendments based on perhaps legislative action in the future, so that staking will be allowed, and there will be maybe another regulator, or like the CFTC, to take responsibility away from the SEC in some way.
Okay, but I mean, it's a massive, I mean, news to say that SEC will not for sure allow staking. Don't you think?
Yes, and that is also why, the whole thing could be delayed.
Yeah, of course, yeah,
exactly. So yes, from what we can tell so far, the SEC is reticent to allow staking. That takes away, an important aspect of investing in Ether. And so it's going to be back and forth. But just like with Bitcoin, think your question before about why has there been so much demand through all the controversy, however difficult it is. More and more people learn about what staking is,
of course.
And that's good. That's good. Many people, they're still getting used to Bitcoin. Ether now is yet another animal. So, while it might seem painful to some extent for all of us from the outside to be going through this, is actually helping more and more people understand over time how Ether and Ethereum are different from Bitcoin.
Yeah, sure.
That's good. Education.
Yeah, of course. And media like the big whale are also here. I mean, not to educate, but to facilitate and to help people to understand what's going on.
Yes.
And for this question, I need you to, help me, to understand one point. Correct me if I'm wrong, but you explained that you will stake part of the reserve of your, future, so Ethereum ETF. Just why it's a part of the business model of the Ethereum ETF?
Well, it's part of that ecosystem. I think the SEC is treating staking like dividends, and so they're making this security claim. I think going through the legislative process, it will, that will change, and we'll have another regulatory either body, I hope not too much, but some entity that understands what this really is. It's not a security. It's really a new financial system, a decentralized financial system. It is the merger of technology and financial services. It is the convergence. Ark is all about the convergences between and among new technologies, and between and among technology and all sectors. So this is very easy for us to understand, and it gives us another opportunity to educate regulators. And we do talk to the regulators. Believe it or not, the research teams at the SEC and the CFTC, they are great. They know what they're talking about. It's really one person, chairman, SEC chairman, Gary Gensler, who's been in the way.
Okay, so Katie, can we say that the crypto industry is winning the battle, even if I don't want to talk about a battle with the traditional world, but once again, 1 year ago, everyone thought that it was the end for the crypto industry in the US, and now it seems like it's a new age, and even if in Europe, we are only talking about the US.
Yeah,
So, yeah.
I think so. FTX's implosion was a setback politically, but
Yeah.
the last year with the judicial rulings has given us many victories. And
Okay.
so what I like to say about FTX and what happened around that, it actually proved the concept, especially of Bitcoin. FTX was completely centralized, completely opaque, not transparent at all,
Sure.
and
Yeah.
completely fraudulent. Bitcoin, completely decentralized, transparent, and no counterparty risk. The counterparty risk, when FTX went down, a lot of people lost a lot of money.
Yeah.
But in Bitcoin, that's just not going to happen. So I think it proved the concept. And the more and I was saying that on the day that FTX went down, I was out in the media saying that, no, this proves the concept of what Bitcoin offers. And then, of course, we had the regional bank crisis, and that's in the traditional world. And we said, no counterparty risk in Bitcoin. So believe it or not, those two seeming disasters helped educate. Again, it's more about education, or draw a contrast with the crypto asset ecosystem.
Okay. And so, I mean, transparency. How things are going at Ark Invest? I mean, you invested a lot in many companies, in crypto. How did you perform in 2023, and what do you expect for 2024?
Okay, so I'll back up a bit by giving you complete perspective, because many people know this, and I would be remiss if I didn't offer the perspective. We boomed during COVID,
Yeah, of course.
absolutely out of
Yeah.
sight.
Yeah.
And then when vaccines came about, people started going back to work, and this idea that inflation would become a problem and interest rates would go up, that was the discussion in 21. We started underperforming. And then in 22, even more so, when interest rates actually went up. And so it was an extremely difficult period for us. In fact, we underperformed the NASDAQ after the tech and telecom bust, which makes no sense, because back then the technologies weren't ready, and they were too expensive. It just wasn't realistic, but there was too much capital chasing too few opportunities. Today we're ready for prime time, and still interest rates going up, algorithmic investing being what it is. They set their sights on our strategy as being hurt the most, and we had a very difficult time. Last year, we started the recovery, and I think it's because now investors are looking at interest rates possibly coming down. That will be good. If interest rates going up was bad for us, then interest rates going down will be good for us. Although I'll tell you, in past cycles, we have outperformed when interest rates have gone up, but nonetheless, we believe interest rates are going to come down a lot more than most people expect. I just put out
When?
This year.
Okay.
And that's because we see corporations losing pricing power. And we think the unemployment rate is going to go up here in the United States. We think prices could go negative, even the CPI, especially because of rents, multifamily housing. There's excess supply brewing, and we think rents are going to come down. And then we think rates will come down more. It should be very good for our strategy. It should be very good for the crypto asset ecosystem.
Yeah, but still, and because also I worked a lot on the financial markets besides crypto, we know that it's not so easy to lower the rates, especially when the market is so high. So
Yes.
I'm not that sure that they will lower the rates.
You're right. You're right. They often need a crisis. That's why I
Yep.
mentioned the unemployment rate going up.
Yeah.
This is an election year in the United States. I'm
Okay.
sure you're hearing about all of the
Yeah,
controversy.
of course, of course.
And so if prices start falling, you bet both sides will be out on the campaign trail saying,
Mm,
"What are you doing, Fed? You said that inflation was your primary variable here. Unemployment rates going up." So I think the pressure will be on. And
okay.
the other pressure will be, I think New York Community Bank is not the last bank. We're still seeing deposit outflows from the banking
Mm,
system in the United States. We're still seeing commercial real estate, not just office, but also multifamily home, under pressure.
mm.
And regional banks are highly exposed to both of those sectors. So if there are defaults, they'll have to recognize them. They'll go directly to equity, and we'll probably have more stories about bankruptcies.
Okay. So it's more short bankers, long Bitcoin, something like this.
Something like that.
Okay, interesting. I have two more questions, and thank you very much. Just let's talk a bit about Coinbase. Coinbase, I mean, everybody knows Coinbase. They had an impressive activity during the COVID. It was way harder after the COVID, especially in 2022. It was better in 2023. We saw that you sold your stocks recently. I mean, what's your strategy about Coinbase?
Yes. So Coinbase is every time there was a regulatory controversy around Bitcoin, we bought
Mm-hmm.
it. We bought. So we were buying it in the 30s, and now it's up sixfold, sevenfold from there. It is still our top holding in the flagship fund. What we do, this is portfolio management.
Mm-hmm.
We are watching something that's gone up sevenfold, and we're very excited about it still because it is gaining massive share as FTX went down, as Binance went through its problems. It is gaining share, and it is moving very rapidly abroad. You may see it in France. I'm
Yeah,
not sure.
especially in Europe. Yeah, for sure. They
Yes,
just
yes.
opened their offices in Paris. Yeah.
That's right. So it is starting to gain share throughout the world. So we're very optimistic. And it is the most regulatory compliant exchange out there. I know the
Mm,
SEC is suing it, but I just told you what we think about the
mm.
SEC and overstepping its bounds. So we are still very high on it. It's the number one position in the flagship portfolio, but we have other stocks that have been hurt in this environment,
Mm.
especially around life sciences, healthcare. In an election year, we
Okay,
always
so
get,
you still own a
oh,
lot of
yes, yes,
stocks. Yeah,
yes.
for sure.
Our
Yeah. No,
competition.
it's just okay. But yeah, you sold part
That's
of them. Okay.
it's very interesting. We post our trades every day. And
Yeah.
so there are websites out there will say, "Oh, they're selling, they're getting out of Coinbase," but we're not. We're just taking profits. It's still
Yeah.
our
Okay.
largest holding. Yes.
Okay. Very interesting.
Yep.
And so, as you know, in crypto, there are many narratives. We can talk about NFTs, DeFi, sci-fi, many things. What's your favorite one in this space, or maybe you have several?
Well, I think if you're asking in the crypto asset world, what will be the biggest winner? We think it will be Bitcoin. And the reason for that, and we like Ether, we like
Hmm.
our Ethereum, Ether,
Yeah.
Solana. We have a lot of favorites here, but if you're asking what is the biggest opportunity, it is Bitcoin because it is the biggest idea. It
Yeah.
is each one of
And
each one of
yeah.
these words is important when it comes to Bitcoin. It is the first
Hmm.
global decentralized, private, no government oversight, rules-based monetary system in history. That's a very big idea. And we don't think people understand how big it is. You know, my background is economics. It's a much bigger idea. Many people in emerging markets understand how big this idea is because they see their currencies destroyed regularly.
Yeah, sure.
But even in the US, if you look at the US, since the Fed has been in existence, the dollar has lost 90.
Yeah, no, for sure. I fully see your point. No, it's just more about narratives. For example, DeFi. I don't know if you are really interested in those kind of topics. Okay.
Yes. So yes, and the reason, and Ethereum and Solana are leading the pack there, smart contracts and so forth. This is nothing more than the internet financial system. It is what developers of the internet forgot. The layer the developers of the internet forgot to develop in the early 90s. That's all that's happening here. And what it will do is take a lot of middlemen out of the ecosystem. You know, by some metrics, and you can go to our Big Ideas 2024 and see, you know, to make a financial transaction happen, it sometimes takes 26 intermediaries. This is peer-to-peer. It'll take 2 or 3. So, you know, I think that it's going to take a huge financial tax out of the ecosystem. You know, the tax is anywhere from 1% to 4%, and in emerging markets, sometimes 20%. So it too is a very big idea. But if you're asking me, what's the bigger idea, a global monetary system or the layer of the internet that the developers forgot to build in the early 90s, I'll tell you it's the monetary system.
Okay, excellent. The last question, and after, thanks again. What's your crypto portfolio? What do you have? I mean, did you invest personally in Bitcoin, Ether, Sol?
Yes. So I have a vast crypto portfolio. It probably, if you're asking me personally, I presume, because not. Yes, I have a vast portfolio. So our first crypto analyst at Ark was Chris Berniski. You may know him.
Of course.
Okay, so he came in as a next generation internet analyst and fell down the crypto rabbit hole and couldn't come out. So he went off and started a venture firm called Placeholder. I'm an LP in all 3 of their funds, and so they're all over the place. And then, of course, my largest holding is Bitcoin by far. And many people have asked me what % of my personal portfolio. I'm going to exclude real estate and exclude Ark, the firm, which, of course, I own. Excluding those, I think more than, I think it's about 1/3 of my portfolio, financial portfolio's in crypto assets. So very, very widely distributed. Yes, but concentrated. The largest one is Bitcoin.
Okay. Thank you very much, Cathy. It was a pleasure, and hope to see you in New York or in the US or even in Europe. You're welcome.
Oh, well, yeah, we just bought a company in London, and we're going to be traveling throughout Europe in April. So maybe we could meet then.
Okay, perfect. Thank you very much.
All right.
Bye.
Thank you so much. Bye-bye now.
Bye.